We've just published the new edition of our top 5 Sydney Hotspots report, and I have to admit it's somewhat overdue, but quite deliberately. So we actually delayed the publication of this report for a couple of months because going back, say, 3 or 4 months when it was first due, there was just so much uncertainty in the market, particularly in the lead up to the federal election. Things were just so uncertain, we decided to wait, and we're very glad we did, because a few months on, we have some clear air. We can actually see where things are heading post-election. With that out of the way, with the changes from APRA and the Reserve Bank in the system, as well as legislated tax cuts and a few other things that are part of what I call a series of fortunate events, we can actually see some forward movement with the Sydney market. Undoubtedly, the Sydney decline has bottomed out, and we're now starting to see evidence of uplift. Auction clearance rates week by week are improving. There's increasing evidence from price data from multiple sources that the previous decline in prices has bottomed out and is now starting to nudge upwards. So we feel a lot more confident in recommending areas in the Sydney market that we think, particularly taking a medium to long-term view, are going to show good growth for property buyers of all sorts. We've analysed sales activity figures, and we've also analysed price data. We've looked at what's coming up in various areas, particularly with infrastructure spending, and we've come up with what we think is a compelling list of 5 locations, some of which are towards the top end of the market and others which are more affordable parts of Sydney set to benefit from ongoing major spending on infrastructure, particularly transport infrastructure. So we can now see good prospects for Sydney. We think it's actually a pretty good time to be thinking about getting back into that market. It's clear that those sections of the market that were declining have started to bottom out. There are sections of the Sydney market which really didn't have any price decline, particularly the top end, those suburbs with median house prices above $2 million, generally have not shown price decline. Some of them have continued to grow quite strongly. So, as is always the case, the generalised data don't tell the full story. The one figure that describes all of Sydney, the sort of figures that are published by the core logics of this world, don't really tell the full picture. There have been parts of the Sydney market that have been very resilient, that haven't shown price decline. And looking forward, some of those upper end markets we think have got good prospects for people to buy in now, ahead of the so-called spring selling season. Right now, we have a situation where there's not a lot of stock on the market, but lots of buyers are competing for good properties. So the Sydney market has become competitive again. So the new edition of Top 5 Sydney Hotspots out this week. We think it's for the first time in perhaps 12 months, we feel pretty confident to publish this report and say, yeah, it's really worth getting. Have a look at it. There are some locations here that are really worth considering, whether you be home buyers or property investors. That's it for now. Terry Ryder from Hotspotting signing off. Let's talk again soon.